Hey, good morning, everybody. Morning, Kimberly, my lovely wife. Alan, Craig, Michael, Lucero, Arturo, Francois, George, David. Welcome, everybody. Today is Tuesday. You know what that means? I got 2 live streams today. This one right here, and then one at 5 p.m. Eastern Time, where I will take your requests for at least 30 minutes and probably an hour. The way it's been going, we call it 30 minutes of awesome. So you need to make sure that you are subscribed and hit the bell with the doodads so you know when I go live, and come back and join me. Like, set an alert in your phone today. Like, set an alert so that you can come join me at 5. You know what? I'll cover every chart. But sometimes I don't say what everybody wants me to say. So I just try to be honest, give you a high level daily chart view of your chart, and usually it's a good time. Everybody loves it. I usually try to hit all the charts. Yeah, that's out back. Yep, that is true, Kimberly. That is right out back. Anyway, let's get into what's happening today. So, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation, intended to be informational, educational, and fun, is not a recommendation to buy or sell anything, financial instrument or otherwise. And if you desire that personal financial advice, you need to hire and consult a financial advisor. Has a fiduciary duty to give you advice based on your financial situation. And if we go with the headline, we have oil. OPEC. Remember the OPEC meeting? No news really came out of that, right? So let's talk about what's kind of going on here. And I need to pull my cursor back over here and grab my infographics and pull this over. So I didn't really see this in the mainstream media. How about you? Massive oil caverns. This is for the U.S. We have these giant oil caverns along the Gulf Coast that we used to keep full of oil, but pretty much they're empty. We're at a 40-year low in those caverns, and it took us decades to fill it up, and we may not be able to refill it for a long time. Now, this gives us 20 days of emergency reserve. Say that somebody attacked our oil infrastructure, or shut down our ability to import oil. We have 20 days of emergency reserves. That doesn't bode well. Some of us were young enough back in the days to remember the oil embargoes. I was not one of them. And as I hear it, prices went epically higher, and that's part of the reason why we instituted the Strategic Petroleum Reserve and beefed up our infrastructure. Now, right there, look, we were at the start of 2022, we were at let's zoom this up. Let's click this, zoom it up. 593 million barrels right there. We were already coming off the highs. But this last year, look at that. We went from here to here. That was the start of this year, and we are on down at 346 million barrels and decreasing. Now, that's not good news if we're going to war with somebody, possibly China or something like that, or if this thing with Russia escalates, or, there's a ton of things. So when, at the start of Biden, we had about 40 days. Now we've cut that in half. We're below 20. This is not no bueno right here. Historically, we've kept around 40 to 50 days of oil in our supply. We kind of dipped down to 30. We spiked it back up. That was kind of, I don't know. We were on a downtrend, but now we're accelerating that downtrend. We are not getting off oil. Now, why do I say that? Well, look at this. So even if we did away with all the gasoline cars, that's 42%, 42.7%. Now, before gasoline cars, we used to throw this away. This was waste product right here out of a barrel of oil. Oil wasn't profitable industry to be in for like the Rockefellers and others until the gasoline engine came along and created demand for this waste. Otherwise this was a waste product in there. So even if we keep distilling. We're going to keep producing gasoline. So we'll have a glut of that if we do away with gasoline-powered things. Now, diesel, that's what, between diesel and fuel oil, that's the things we've historically always produced out of oil. And so that 42.7% was waste. This 27.4% goes to diesel, and for trucks, you're looking at 12.3 gallons out of a barrel of oil. A barrel being 42 gallons. So let's just, we're starting out with 42 gallons, so just under 45 of refined products. So you kind of expand when you break them down. So jet fuel, 5.8%. Heavy fuel oil, that goes into like cruise ships and stuff like that. Asphalt, 4%. Light fuel oil. How many people know what light fuel oil is? And then hydrocarbons, like plastics, and we make butanes and propanes and all sorts of stuff, out of those. And then we have other stuff, rubbers and paints and paraffins and all the other things that come out of oil. So we make a lot of stuff that we're not just going to be able to do without. So this is it's one of those things. And we have lubricants that come out of this. Lots of products that come out of oil. And if we just drop gasoline, that's going to be a huge waste product. So, hey, no problem, Larry, Patrick. Hope you can view the Wi-Fi. We'll talk about United Airlines today too. So, this is one of those things to be cautious about. Draining the Strategic Petroleum Reserve, not in the best interest. So, what might be the problem to watch out for? So, if we go to war and something happens to the supply, we're not going to be driving. We're not going to be flying, certainly. And we're not going to be able to afford to do anything. It's going to pretty much cripple our country. And even a lot of our electricity nationwide is generated off of oil. Natural gas, it's one of those things that we rely on this much more heavily than we even move all the cars to electric. We're still running them off of hydrocarbons. So this seems like a poor plan. I don't know. Anyway, moving on. Let's talk about, we had core retail sales coming out. This is Tuesday, July 18th. We had core retail sales coming out this morning, and they came in light. So the market just not feeling super sparky this morning so far. I mean, this kind of flows with consumer sentiment to me. We're not feeling it. I'm not seeing retail being super strong. And rolling on down, tomorrow we have housing starts and building permits. I'm not sure how that's going to come in. That's a big question mark to me. We'll see what what happens here. I'm seeing some interesting trends in the local economy, but I don't have a feel for the nationwide situation necessarily. I'm seeing some areas shut down. It's hard for builders in this area, and this is supposed to be an affordable area. Hard for builders to build the lower end houses, the houses under 200,000, and make any money doing it. So that's kind of interesting. I guess the labor costs and, even though the raw materials have come down, the, actual materials like lumber that you buy lumber retail has not actually come down that much. So it's putting stress on that building industry. Now, I was having a conversation with a guy last night, and he was saying, I kind of have that feeling like it's not the exact same. Remember, the market echoes. It's not the exact same as what we saw in 2008, but I'm seeing a lot of this weird people doing weird things, companies doing weird things, and like we had back before the 2008 great financial crisis. And you know what? Typically it's about 8 to 10 years between economic meltdowns, and look at where we're sitting right now. Way past 10 years since 2008. So just keep it in mind that we're sitting around 15 years. Now, coming on down to Thursday, unemployment claims, existing home sales, and then Friday, relatively benign, nothing really economic news-wise. But next week, we have the FOMC coming up. So, what's everybody here for? Let's talk about some market stuff. And always disconnecting my charts. So, back in January, I kind of speculated with a blue line here that maybe we'd go sideways for a bit and then pick up the interest rates again. Now, if you're unfamiliar with this chart, this is the two-year Treasury constant maturity rate, which is the, basically it's the real interest rate of the economy. All right, that's the real prime rate. And then we have the Fed funds rate, which is an orange overlaid on there. So the blue is the DGS2, two-year Treasury constant maturity rate, and the orange is the Fed funds rate. Just hit the compare button right here and add that FUNDS right on top. And we look at it on a weekly chart here. Now, why do I keep an eye on this? Let's zoom out here, talk about it. We haven't talked about this in a couple weeks. So back here, anybody remember the end of 2000 or 99, year 2000, what happened in the markets? .com bust, right? Big market meltdown. And then rock along 2007, we were just talking about. Into 2008, great financial crisis. We started raising rates, and then this was a little mini freak out. If you're a trader, you felt it. This was like a rate freak out. And we got a sizable pullback in the markets, but it didn't make headlines. So we saw that, that was almost 10 years. And then now we've ramped up on the back of COVID, and I think we can go higher. But every time the orange line, the takeaway on this chart, every time the orange line crosses and stays above the blue, we kind of go into this countdown scenario where we have like 3 to 6 months. On average, it's like 150 days, which is 5 months. We have that 3 to 6 month time where we kind of go sideways, and then we get a financial freak out of some sort. Hey, Billy, morning. And so we get that sideways, and are we going to freak out this time, or are we going to climb up and then get the freak out? So it looks like IWM hit the gap fill. So no trade on opening bell alerts this morning if you're one of those members. So DGS2 in kind of a quandary here. All right. The blue line kind of flying really close to the orange line right now. They cross back over. We could see this ramp on up right now. The Fed's saying they're going to raise next week. I don't know. They're not chasing the market currently. So maybe they're trying to prove their point that they set the rates, but in reality, they're always chasing. All right, they try to set the rates and then end up chasing them back lower. And it just happens over and over. All right, they're not usually the leader in this game. They haven't been for all of my trader life. They've always been chasing. Why would that be any different now? It's probably not. And they've been chasing on the way up, and they may chase it back down, but if DGS2 breaks out, they may chase it on higher. And that's kind of what I thought might happen back in January. So what does that mean for us as traders? Well, we can't trade on, some of us trade on years out timeframes, but I make my money in the smaller timeframes, the stuff that's happening today and in the next couple months. And that's why we look at stuff like the 30-minute chart, which if we look at this, we busted up through the roadmap line and haven't been back to test it. So I do kind of expect at least a pullback down to this 45.34, but we can still extend. This extended yesterday. We got a little pullback. We kind of have one wave, two waves. We'll probably expect at least a third wave down. And waves, if you're not familiar with my lingo, that's from Elliott wave theory, but you don't have to believe it works. Just check out my numbers. And right there, look, it has confluence of coming down to about this 50, 45, 35, 34 area right there. Confluence right in that zone. If you don't believe I get these right, go back last week. I was nailing them almost every day. So it looks like we may see that, but we could see yet another extension higher. This one came up short of getting any kind of 1272 off of this last pop right here. And we came up shy. That's showing weakness on going higher. Now, the simple S&P 500 chart does show us potentially going up to this 45.99. Now, remember the S&P 500 and the ES, while they represent the same instrument, they are not necessarily exactly priced the same. So we see different price levels on ES. Now, if you're unfamiliar with ES, that's the S&P 500 futures. Stuff like SPX, SPY, all the S&P 500 stuff derived from here. NASDAQ undergoing a historic rebalancing. I don't think it's going to affect much at all. It's probably going to be a nothing burger. They're not really rebalancing in any meaningful way. There are 7 companies, the Magnificent Seven, as they've been calling them lately, that represent $11 trillion of market cap and 54% of the NASDAQ. They're going to rebalance that so it's only like 48%. So what? It's likely to climb back up. So just keep it in mind. They're going to rebalance NASDAQ a little bit, and we have a huge OPEX coming up this Friday, the monthly expiration, and there are trillions of dollars at stake again on those options. So it could create some volatility, or it could mute the move this week. That's kind of been the two themes this year. We've either had some volatility coming into that OPEX, or OPEX being options expiration, or we kind of churn. And right now, this is looking like churn to me. We're churning a little higher, churning a little lower, just kind of flying sideways a little bit. We may see that continue the rest of the week. Russell here, continuing to, we need to flip this back to a daily so we can really see where we're at on the Russell right there. A little bit of trouble getting through that 1272 extension. It just kind of parked there for a few days. Next up, 1991. Kind of expect it to reach up and retest that. And funny enough, that 1618 just happens to also be where this trend line is. If we connect that high, and maybe this high. So that'll be a significant resistance right there, and we may turn down again. All right. May turn down again from right there. Anyway, this high. Is that going to be the high this time? We shall see. All right. Oil. Now, despite all my talk about oil, we actually bounced off of the roadmap line, and we're continuing down a little bit here. Bounced off. Yesterday was a red day. Can this be the support zone? I mentioned we may come back and retest these highs. Look at where we are. If we draw the highs right across there, we came right back. High, high, high. Rejected every time here. We broke through, came back to retest. If we hold support here, positive. If we start breaking down below 73.50, make sure I got that right, 73.50, yeah. If we start breaking below 73.50, likely to come on down. I'll talk about this more this evening during 30 Minutes of Awesome. Come back for more. We'll see what unfolds today. Gold looking like it's potentially working on that breakout that I've been looking for. I may wait till we're above this consolidation over here. You see how we went sideways from May all the way through late June, almost a month. If we can get above that, that may be the point that makes me feel better about getting into some gold long term. I'm talking long term out to 2025, not short term like next month. Bitcoin continuing to churn. We're still stuck in this range, and the range comes from like a year ago. So still churning. We're still in this range. We've set up a bigger range right there just in this consolidation. The top has been up here close to 32, not quite breaking into it, and all the way down here to 29.5, 29.6, and we're just churning. and everybody wants to know about the miners and the ETFs and just pull up the Bitcoin chart. If it's going sideways, if it's not moving, it's like, why is Mora pulling back? Well, because Bitcoin went from 32 last Friday down to 29.6, 29.8 today. That's why it's pulling back. So keep in mind what things are related to other things. All right. If Bitcoin's doing this, then all the crypto stuff is not going to be trending very well. You may have a few here and there that are, some hype coins breaking out, doing whatever, but this represents 50% of the crypto space. If 50% of the crypto space is churning sideways in a weird overlapping corrective manner, then that kind of affects a lot of the crypto. All right. Ethereum probably needs a deeper retrace. It did not make a higher high like Bitcoin, and it may need a deeper retrace. Dollar sitting at the lows. This may just extend lower. Typical pattern is to bounce back up to the 100 and then drop out, but it can just recharge right here, collect itself a little bit, recharge some momentum, and then drop. 98.40 would be the next place I expect support if we just drop on down. I do expect resistance at about $100.80 if the dollar rallies. So historical market, mainstream market correlation says that when the dollar is dropping, the market is popping. We'll see if that plays out or not. I have not seen that correlation being very tight this year, because when we got this, the market continued to rally. And when we got this, the market continued to rally, despite the strong rally when the dollar did this. So I don't necessarily think it's correlated that way, but we'll see what happens. All right, let me refresh the list here. Still have yesterday's list. There we go. PLTR. This one I have a $22 target on. Beautiful pullback, breaking out again. The next move up. We may have resistance at 18. May have resistance at 19. 22 is the bigger pattern that I'm expecting based on some of this stuff back here. All right. That's PLTR. I don't really see it as actionable. You're kind of chasing it at this point. If you're trying to get in now, I picked up my positions like a while back. A while back being down here, not up here. So don't get FOMO. You missed out. Don't have fear of missing out on the last $4 move. Let's look for the next one. There's going to be a next one. All right. There won't be another Palantir, but there'll be another one that moves. BAC breaking out of the wedge potentially. We had earnings and beating on the top, beating on the bottom. Not getting a stellar reaction though. Not crushing it. We're popping a little bit, finding resistance at the roadmap line. This can result in going lower. This is not bullish until we're above all this junk right here. Certainly above 30, let's say 31.50. Got to be above the roadmap line, above this, where these lows were, this resistance, this high. Got to be up here to go higher, not finding resistance and potentially going lower. So be careful there. AT&T continues to hunt for the bottom, and zero can be a possibility. You may say, no, JT, let's talk about it. AT&T can't go out of business. I guarantee you AT&T can go out of business. All right. Their stock price can keep going down, and they can be in trouble. Don't chase this. Verizon. Look, telecoms look pretty bad. That chart looks bad, and that chart looks bad. Don't chase this stuff right now. This is not a potential, you try to catch the knife, and you end up missing an arm, all right? T can, this can lose 50%. We can go down to 6. We can go down to 5, all right? And when there's a pattern that shows up that we're going positive, I'll probably talk about it. But right now, that's not AT&T, and it's certainly not Verizon. Both those look like dumpster fires. Be careful. All right, it's not that the companies are horrible. It's that the stock chart looks horrible. TDOC, right here, popping up, finding resistance at the roadmap line. I see no reason for this to continue higher at this point. Based on this chart, we're right at the resistance. It's going to take a significant move up into the 30s to get me interested in this, and it's probably going to have to do this, make a higher high than we had back here, here, or here, and then retrace like this, find support, and then turn up again. And then right here would be where I was interested in this, right in here. SCHW, yeah, they're breaking above. Can it hold it and retest? We'll see. This actually had a bigger potential. It did look like a potential reversal and might come up to this 110, 120 area. That was a three-wave retrace. It held a proportion, breaking above the roadmap line, the first thing we expect. Now, to actually take a trade, we need it to pull up a little bit, retrace a little bit, and then set up just the same pattern. All right. And probably had an awesome sound. And I thank my man Clinny Benson who made that animation for me. All right. LMT. Yeah, this is probably going to turn bullish. It probably needs to retrace. That was the extension 478 of this move back here. Probably need to retrace back to the roadmap line, find support, and then turn up, and we can go again. A lot of this stuff looking for retraces here. Link, I mean, that's a ridiculous candle. And coming up near the prior highs right there. Be careful. All right, that's a big red candle. It can come right back down to the roadmap line. RKLB, I was thinking Roblox. This is Rocket Lab. And let's see. What did the chart tell us? That's the low, that's the high. This was not a good proportion, but right to the 1272. Found resistance at the 100. Finding a little resistance at the 1272 and may go up to 794. Now, I do have to caution, low price stuff under 10 bucks, doesn't always follow my patterns, so be careful chasing that one. MS, nice consolidation. It's got to break above highs to get continuation. And this is overlapping and not particularly interesting to me at the moment. It didn't break on out back here. It rolled over and I don't know. I don't have a particularly compelling, that's a Head and Shoulders right there. Don't have a particularly compelling reason to get into this, although it's an inverse Head and Shoulders there on a smaller pattern. A smaller one right here. So potentially, there's the potential for this to rally up to about 100, which is the prior high. FDX continuing to rally, pushing extensions at 1618 at 265. Be careful, we can roll over and do a correction into earnings. The correction can come all the way back down to 227, a 40, 50 point risk right there versus not a lot of upside left. I mean, it can keep going, but I don't have a high probability upside right now. MDB, this one can push on up to this 460 area, but it left a huge gap and it may retrace more. Now, this is like charging up energy before it can push on higher. The further and higher these go without doing any kind of pullback, the more energy that takes and the more likely it is to get an outsized pullback when they finally do give it up. XPO, That one's popping again, reaching ridiculous targets. And 70, this thing at some point is going to get the retrace. It does it back here lots of times. It did have a head and shoulders, and then kind of the failed pattern played out, and now the extension pattern appears to be playing out. So put that up there. Yeah, right to the extension pattern. So it did a failed pattern, and now it's doing the extension pattern. So interesting. There is significant resistance right there at 70, and we're trading lower at 65.80 right now. NVS, Novartis. I think I updated this chart the other day, but it didn't stick. So we'll update this again. Roadmap bounce, potentially an entry above 103.50. Looking for 108, 112. Not a huge upside potential, but that's the classic return to the roadmap, bounce, and then go on an extension. Classic. PKX, POSCO, that's a ridiculous move and probably going to come back to reality a bit. Pins, working on that breakout. Nice potential. Measured bounce setup. That would put it up to 37, 43, 53 on the potentials. I've got you can see my alerts. The boss, Kimberly, owns some of this in her account, so keep an eye on it. This one can go, looks a lot like the ABNB chart. This one breaking out yesterday. Targets much loftier up here, 180, 214, 260. Maybe like JT, I don't think it's going to happen. Haven't you heard all the news on Airbnb and the renters and blah blah blah? Well, doesn't matter. Chart pattern is a chart pattern. This thing can blast off right up in this area. So, Boot is another one that's been rocking it. Looking for that to come up at least this $100 area, if not on up into the higher prices, 130, possibly 160. That would be absolutely crazy, but it has the nested pattern. So I might step off this train at this 100 to 110 area. So, same pattern, and it worked out back here, and then it's working out up here so far. I mean, I just look for the same patterns over and over and over. MASI, that one getting slammed. I mean, lower low. Be careful when these things can't hold on to, it rolled over. Try to break through the roadmap line, try to break through the roadmap line, lower low. That's dangerous. Baidu came up, meeting resistance up here, pulling back a little bit, may come back to the roadmap again. It did not get the extension on that last move. You can barely see the roadmap line there, but we didn't get that extension higher. It may go on up to, that 155 is resistance. May go on up there, but it may come all the way back to the roadmap line again at 134. And we do have, all these lows that happened right down here at this 115 area, and the consolidation, it's like that area for support quite a bit, that 100 to 115 area. It may come back there again. I do kind of just expect sideways out of this one. It's not showing a lot of conviction, and there's some weird economic junk going on in China too. So PNC, this one has a head and shoulders that potentially would take it up here, but if it fails, it can go right back to the lows or even get an extension down to 100. PNC was announcing earnings today, beating on the top, but not on the bottom, and no surprise, banks are going to still have problems. We didn't resolve anything back in March. PDD, just churning more China garbage. Potential to go higher, but potential to go lower. And it's a tightening range, and it may just continue to this wedge thing that it's working on right now, where we've got lower highs and higher lows, and we may just fill that on out, and at some point then break out. Netflix, a few of these things announcing earnings on Wednesday. Thought I might just hit on a few of the highlights here. Maybe you can prepare for what might come. Netflix, I do expect to go retest this 500 area, but that's a heck of a move up past the 1618. We may need a retrace back to the roadmap line before we can get that final push up to 500. If it does get this retrace on earnings or otherwise, that would be a time to potentially look for a position. I'm not saying buy it when it gets here. I'm saying look for a position when it turns back up for the move to 500. Opportunity there. Tesla overcooked, and we're at the 1272 and not breaking through at this point. Retrace back down into this consolidation would be what I would expect short term. This one also has earnings on Wednesday, and it's not been unusual to see 5 to 10% pullbacks on earnings. If you go back, I'll do some numbers and come back with some numbers. We'll go look at what kind of drops have occurred after these earnings for the last however many. I'll pull as many as I possibly can. We'll see what kind of pullbacks we get. Typically we get some pullbacks. I'll put some numbers to it. We'll talk about it. It's quite likely we see some sort of pullback. 5 to 10% easy. 15% would put us back to support. So be careful chasing Tesla long. There's probably not a lot they're going to say. They've used up all their ammunition on these deals they've cut. These are now, they've already announced their sales. They've already told us all the goods, except for how much money they made doing it. I don't think that there's much they can say that's going to be crazy happy. So, all right. IBM, a little bit of trouble going higher. These also announces earnings. This could be a potential roadmap line bounce. A breakout over 139 could take it a little higher. We do have significant resistance here, and we've just kind of been churning a little bit. Now notice this one did not, in 2022, this was not a big, this doesn't match the market. So they've kind of held up, potentially breaking out, going higher. Not sure. We did see that extension right up to the 1272, and then the retrace, and it went quite deep. This could be a measured bounce, and we could see this go significantly higher up into the 171 area, but we need to break out over 140 first. UAL also announcing earnings this Wednesday, and 59 resistance, these prior highs support, and if we break down below that support, probably coming on down. DFS, that one probably going to push on out to the 1272, maybe the 1618. That's the next targets. It is on a breakout. Broke out of the downtrend finally. We can see this go significantly higher. AA, that looks pretty bad. Alcoa, demand for materials is not manifesting here. So this looks like it can definitely extend lower. And let's see how low can she go. There, right there. We could see Alcoa come on down to the $20 area. All right. That reminds me, FCX also potentially trying to work out a breakout, but not quite there yet as far as what I look for. We tried and we've come back. Probably going to, if we can't hold the roadmap line here, we may go lower on FCX. So, holding the downtrend so far. All right. It's kind of the day so far. What's moving, what's popping, what's dropping. I just hit the list for Wednesday's earnings after the close. And remember, tonight, this evening, however you want to look at it, 5 p.m. Eastern, I will be live for 30 minutes of awesome, taking your request for at least 30 minutes. Come back, see me, get your requests in. Make sure you're a subscriber, because to be able to chat with me on the live stream, you got to be a subscriber of the channel. And I'll see you then. All right. Have a good day. Stay safe out there. My bias for the day is very cautious with a potential pullback. All right. We discussed the target price on the ES at the head of this show, which was, we'll zoom it back up, right down here. Do expect this to come down and retest this area at the roadmap line. But if we do start making higher highs, the resistance is up here around 45.69 right now. So that's what we got for the day. Stay safe out there. The account you save may be your own.